Yeah, let's actually get to those tariff headlines because there's a lot to really go through, including that 20% on Taiwan, as we mentioned, but also Canada going from 25 to 35%. Avril Hong is here with a recap of what are those rates to watch. Avril.
Yeah, I mean, I think the simplest way to put it is kind of to put things into three buckets. So we have sort of the winners, and on the other end of the spectrum, we have those that have been hit with higher rates that were anticipated. And you have the likes of Canada, as you mentioned, the raise to 35%, even though there are some exemptions. When you look at the USMCA, that is still a much higher rate than was previously threatened. You have Switzerland also on that end of the spectrum, 39%. And Taiwan, as you guys were just alluding to earlier, with that higher rate than the export rivals, Japan, South Korea, which have been hit with tariff levels of 15%. So you've got to wonder what that is going to mean for the export competitiveness. And then here in Southeast Asia, it's also worth noting that the likes of Thailand and Cambodia, they had been potentially grappling with 36% rates. So this is a positive outcome for them. I would just highlight the likes of Malaysia, that at 19%, this is really not that good of an outcome. When I spoke to the trade minister in May, he said that 10% would actually be a good outcome for Malaysia. And you may recall that Malaysia, as chairman, as chair of the ASEAN bloc this year, has been talking about how these tariffs really not a good way to kind of restructure global trade. They have been quite vocal about this, and they've hosted as well some of these Chinese leaders, including the Chinese president earlier in the year. So worth keeping all that in mind as context for what we're seeing today. Aside from that, the last bucket I would just highlight when it comes to Singapore and Australia, given this confirmation of sorts that the baseline rate is going to be 10%, that means that the previous concerns that it was going to be 15% for the likes of Singapore or potentially Australia, that kind of eases things a little. And don't forget, for the likes of Singapore, it has, that trade relationship with the US, is actually importing more goods from the US than it actually exports to them.